All right, so on the Money Show, we make sure that we just don't talk about investing in mutual funds, but also help you meet the brains behind these funds. In this week's Meet Your Fund Manager segment, we have on board Sumit Agrawal, Senior Vice President Equity, Bandhan AMC, and we'll be talking to him about Bandhan Focused Equity Fund. So let's understand more about this fund and what does a focus category actually mean. So, Sumit, good evening and welcome to the show. My first question is basically what exactly is a focused equity category? I mean, let's just start with the very basic and a layman question.
Thanks so much for having me on the show. So very basic question you have asked, and I think it is the most pertinent question to answer. This is a category which came into existence almost about 3 to 4 years ago when AMFI came up with categorization as a whole. And what it means is there's a particular category with only limited set of stocks, for example, maximum 30 stocks. So any portfolio which is categorized as a focus equity category will only have up to a maximum of 30 stocks. The logic behind this is pretty simple. For example, if you ask amongst your friend circles or common investors or anybody in your family and friends, if they are able to identify, one or two multi-baggers in their life, chances are, 8 out of 10 them will say that, yeah, we have identified. But if the second most question, which is if you ask them whether that identifying has helped them achieve their financial independence or have they created a lot of wealth because of that, probably the answer is no, because the reason is that they have not invested enough in that idea. So the primary purpose that a focus equity category actually offers is investing sufficiently enough in a very convincing idea so that over the life of your investment horizon, you take advantage of having a sufficient allocation to a winning idea, and as a result, your IRR goes up and the wealth creation journey at the end of it is quite successful. So that, in a nutshell, is the idea of a focus equity category.
All right, Sumit. Now let's talk about the focused fund that Bandhan AMC has to offer. So you are a 30 stock based fund, is that right?
Yeah, that's correct. Up to a maximum of 30 stocks. Yeah.
All right. And how is your portfolio diversified in terms of market caps? If you could elaborate on that.
Yeah, so the fund mandate actually is a flexi cap mandate in approach. So even within 30 stocks, the fund investments can range from from micro, mid to small and large cap. As of now, we are about 75% in large cap, and the remaining is between mid and small cap stocks. However, the outcome of the portfolio mix between mid, small, and large is an outcome of a bottom-up stock selection process. So we don't start top-down that this is the proportion of large, mid, and small that we want to have. However, we start bottom-up and we identify an idea. If it's good enough, whatever bucket it falls, we go ahead and buy.
It looks like it's a very large cap based focused fund right now. Any specific reason why you have taken this call? Large caps definitely give you a consistent income. It provides stability to the portfolio. And is it the reason why you've added more large caps in your portfolio, also looking at the uncertain environment right now?
Actually, not really, because if you look at the journey of the fund for the past 7 years, I think we have had large caps to as low as 50% and to as high as up to 75 to 80%. And we have dwelled a lot over between various ideas which comes across and goes out of the fund. In fact, the current trajectory in the fund is about slight increase in the mid and small cap proportion. And as I said, it is an outcome of the ideation process, which is a very, very research-driven bottom-up approach. I would say that the category as a whole also is somewhere around 70% plus large cap. And within that, I think our allocation towards mid and small is slightly higher. One more point which I want to add specifically for the fund is that generally the fund in the past has tendency to invest in some ideas which are probably under-researched, not very well invested, but have good potential for the future. So in the past, if you see, there are many ideas which were not there in any of the other funds, and probably we were the first or the second one to invest in those ideas. And today, some of those ideas are actually quite consensus ideas, I would say. So the fund, in a way, has eye for identifying potentials of the future, judiciously allocating some money to them, and then monitoring them continuously over a period of time as to the investment thesis is playing out or not.
We really don't talk about day-to-day markets, when it comes to the fund portfolio and its allocation. But then looking at the trajectory now, do you think there's any chance of a potential increase in allocation when it comes to mid cap and small cap? Do you think that's on the card, or can it be?
See, basically, if you see the entire space has kind of not gone anywhere in the last 2 years or so. And however, if you look at the month of April and May, probably the broader markets have done really well. There is a macro backdrop to that possibly rates are I think there's a general view that it may be stay here for longer, and liquidity is improving, and probably the period of underperformance is kind of behind. So in that context, if we see, and if we correlate with some of the post-COVID recovery that some of the mid and smaller businesses have actually displayed, I think it makes a lot of sense to identify some of the fast-growing ideas in the mid and small cap space. And as I said, this is a growth-oriented fund with a quality bias, and this quality as well as growth probably has not done well in the past. Probably this is in the past 2 years. Probably currently is the time to explore this theme further and add a few ideas and gradually. I'm not saying it's going to be a one-way rally in this theme, but probably a more measured bottom-up stock selection process which we can follow and identify ideas. And that is where I think the probable allocation to mid and small probably can go up.
Looking at in mid cap and small cap?
Sorry?
What kind of themes or sectors?
See, basically, mid and small cap actually offers you a very wide variety of sectors. If you look at the 200 stocks, many of the industries are actually completely, away from it. So a lot of ideas into, let's say, low ticket, small cap consumption space. Some of the small cap pharmaceutical sector and bottom up opportunities over there also looks good, and the entire consumer space as a whole is actually offering a lot of steady growth, new age, bottom up opportunities. So this 2-3 areas I think is an area of interest for us. Obviously, I cannot speak a lot on this, but thematic basis, I think some bottom up chemicals, bottom up consumers, and these are two names probably which I would look to add.
So, but what's the sector allocation so far in the portfolio?
Yeah, so we are very positive on financial services as a sector. So that is one biggest sector wherein we have a large overweight. And the reason being, normally, typically financials work in 3 cycles. One is a credit cycle, one is a margin cycle, and one is an asset quality cycle. So asset quality, all of us know it's quite good in shape. Margin probably in a stable phase, and credit, which is, I believe, is at the beginning of an up cycle. So I think that gives enormous opportunity for having allocation in a financial services oriented sectors. And also the number of opportunities in the listed space has increased meaningfully in the last 10 years. You have a large number of insurance companies, asset management, brokers, distribution, and so many other players you can play through a financial sector exposure. So I think that is one big sector wherein we are overweight. One sector which probably slightly contrarian, you would say, is an IT sector wherein I am currently overweight in my fund. And my reasoning is typically, it's a good sector to own, but probably in a little bit of down cycle. So a good sector in down cycle gives it good pricing, good entry points, good valuation comfort, even though the near term might be slightly sluggish. But I think a fund manager should have a temperament to endure that kind of a near term pain. And because these are the times we'll buy these companies at a cheaper valuations. So IT again is a contra bet. Similarly, we have higher allocation than the benchmark on the auto sector as well, which is an overweight which has been running for almost 1.5-2 years now. And I think that has played very well. Apart from that, a bottom-up sector like chemicals, I think here again, the fund is having slightly overweight. And these are again bottom-up ideas, again, some of the non-consensus funds, and that has played out very well.
So, but do you think focused category, being such a concentrated category, becomes much more riskier than a flexi cap category?
Yeah, that is a perception. So, and obviously, therefore, stock selection becomes very, very important over here. If you end up identifying a good stock and let's say some or the other bad news hits or there's business fundamental change, you should be wise enough to take corrective action and mitigate the risk. Which is a tough task because probably at that time you will have to sell the stock at a lower price, maybe below your cost or maybe not at an optimum return. But I think that is a wise step that you should take. in the past, we've had sometimes, where some of the stocks really did well because the macro thesis went for a toss, or there's some micro level developments in the company. But I think the key to success lies in the fact that as soon as you identify a mistake, go ahead and correct it. And if there is nothing fundamental which is changed and it is just the market noise, then probably endure the pain and hold on for a while and let the noise surpass. And eventually, those stocks will make money. So ultimately, again, I said the proof of the pudding is in eating. So try and stay with the fund, or try and stay with your investments for a longer period of time, especially in the non-discovered name. And over time, we have seen that this is a space which actually gives you multi-baggers. So even if you are able to identify 1 or 2 or 3 out of them, I think the purpose will be done.
Sumit, now in a nutshell, if we have to follow the principle of diversification, which should be there when you plan your portfolio, how much should we have in a flexi cap and in a focused category fund? Or you think any one of these categories can be enough when it's diversification is the purpose in your portfolio? You really don't need both the categories.
Yeah, so it's a very evolved question, I would say. I think especially after the categorization, there's a wide variety of options available with the investors. But my view is that focus category slightly is meant for matured investors. So Flexi itself has a very nuanced way of product positioning, and there is an audience for that. However, people who want to create some bit of allocation for potential wealth creation, because as I said, the investor temperament is also important in addition to the fund manager temperament. So I might be very happy, or I might endure the pain, but if my ultimate investor is not ready to do that, he might redeem at a lower NAV. So again, I would emphasize that focus category might not be an entire allocation in your portfolio, but definitely it should be used as an add-on as to some portion of the portfolio, so that you get a kicker of wealth creation over long term, and it corresponds to your investor appetite and and your risk appetite as well.
All right. I think that will be all. Thank you so much, Sumit, for removing time, for taking your time today and helping our viewers with this category and the fun understanding.
Thank you so much. Thank you so much.